Afternoon, everyone. I noticed a few of you are flagging, so the good news is I'm the final presentation this afternoon, so you've just got 20 minutes to go. So if you can just take a last sip of your coffee, just keep you going through the next 20 minutes. And if I can't get this technology to work, it might even be less than that. So let's see how we get along. Okay, so I think we've heard in the course of today that financial services is already digital. I think Paul mentioned right at the start that close on 50% of the adult population in the UK are active online bankers. The vast proportion of routine banking transactions are now done online. And I think if people are confident enough to do their retail banking online, then they're certainly confident to research and purchase financial services products online. And that's certainly an observation that Google has noticed over the last few years or so, where the internet has become quite integral, really, to the financial services purchase cycle. And as you can see from these stats here, I haven't even included insurance on this, because general insurance, pretty much the vast majority of it, is bought end-to-end online, maybe online with telephony as well. But as you can see from these stats, nearly half of credit cards are now bought online, loans as well. And what's really interesting is that even products, more complex products, more considered purchases like mortgages, the internet is playing an increasing role within that purchase cycle, both in terms of people researching online and people actually expressing a preference to arrange mortgages online as well. And then, if we take a look at investments, Google's been tracking this quite carefully over the last couple of years or so. And what we've noticed, we call them queries. That's basically searches that people are making on Google for investment-related products. So as you can see, there's been 27% year-on-year growth with people looking for investments products. And if you split that down across stocks and shares, asset management, funds, emerging markets, so on and so forth. Very much peaks and troughs, but very much the underlying trend is that people are searching for these products. And much as we all love financial services, people don't search on these things for a laugh. They do it because they're genuinely interested in finding out more about these products and helping them along the way as far as the purchase cycle is concerned. So integral to that path. Now, Google is not a financial services company, at least not yet. So it's fairly daunting, I guess, from my perspective, to sort of stand up in front of a room full of experts within this sector to sort of tell you how you should be organising your distribution. So I'm not going to do that. Essentially, what I'm going to do is to sort of talk about what we believe are the sort of major trends in web development over the next few years or so. And then hopefully that will prompt some thinking in your minds as to how you can embrace some of those trends in the context of your particular sector. So, three main trends that I want to talk about, and you would have heard these in the context of today's presentations as well. So I guess what I'm going to try and do is to give a slightly different slant on each of these. So let's take mobile first of all, and again, financial services is already mobile. There are 3 million active mobile bankers in the UK, and if you bear in mind that all of the banks now have mobile banking applications. It is now a hygiene factor. If you don't offer a mobile banking app, then you're not really on the playing field. So it's already ingrained within financial services, not to mention stocks and shares and so on and so forth. The reason why we think it's important is that research came out from Mary Meeker, who's an ex-technology consultant for Morgan Stanley, who predicted that by the end of 2013, more people would be accessing the internet through mobile devices than they would through desktop. Now that's fairly significant. Certainly in our world, if people are using mobile devices for search, then obviously that touches our world, which is why our executive chairman has said that we pursue a mobile-first strategy. Everything that we do in terms of new products and services we lead with mobile, and then the rest will follow. So it's absolutely critical from that point of view. And again, from financial services, what we're observing is that close on 15% of all financial services-related searches on Google in the UK come from mobile devices. So it's already 15% of searches, and that's rising exponentially. And the mobile web is going to be infinitely more powerful than desktop web. When combined with cloud computing, it essentially places, or quite literally places, a supercomputer in the hands of consumers who can access all of the world's information wherever they are in the world, any time of the day. It's of immense value add to consumers and a fantastic opportunity for all organizations, financial services companies included, to try and develop value propositions to meet that demand. So that's mobile. The second one is local. Now, we've observed that roughly about 1 in 5 desktop searches are related to location. On mobile, that increases to 1 in 3. So there's 1 in 3 searches on mobile that relate to things that are close to where they actually are when they're using their mobile phone. And a piece of research that was done by Forrester suggested that of all of those people making searches on desktop or mobile, 70% of them then go on to actually buy something from a local store or a local business. So there's a very close correlation between local searches and it actually driving commerce. And I guess if you think of it from your perspective, particularly the IFAs amongst you, if people are going online initially to do some research, but then they want, professional advice, then the chances are they're going to go online and find out who are the IFAs in their locale that they can give a call to and arrange meetings. And again, from Google Maps perspective, nearly half of Google Maps usage now is done through mobile because people are interested in the relevance and the timeliness of local search. So local is very important as well. Next one, social and personal. So again, John gave an excellent presentation on social media. He threw a lot of pretty compelling stats at you in terms of the growth and the sort of mass market of social as well. But I'm just going to throw one more in, and that is that social media has now overtaken pornography as the #1 activity on the internet. So that in itself is fairly significant. It now occupies, in excess of 20% of all time spent on the internet. That's how big it is. So just to give a slightly different perspective, whoops, it's the wrong way. We've done some research in terms, again, the typical purchasing cycle for a vast array of products, including financial services. And as you can see from this slide, consumers are getting more discerning. I think it's been mentioned 2 or 3 times in the course of today that, because they have internet access, it enables them to find out more about what's going on within the world. They can do their own self-direction in terms of finding out more about products and services. And the number of consumers that rely on trusted places like user ratings or product review sites is increasing all the time. Typically, it's between 4 and 7. Actually, within financial services, I guess because of the complexity of financial services, it's typically between 8 and 12 different sources are used to inform the consumer before they go ahead and purchase. And most of those are online. So this model, any marketeers in the room at all? Go on, don't be shy. It's nothing to be ashamed of. Just a couple of you, okay. Well, you may be familiar with this model. It was actually invented by Procter & Gamble some time ago, and it's the grey bit of this that's the traditional model. So it was basically around, first of all, stimulus, and that essentially is advertising. So it was a need for organizations to advertise their brand, advertise their products, which then led to the first moment of truth, which is essentially the consumer going into the store and buying that particular product. And then the second moment of truth, where having bought that product, they go away, they experience that product. Now, that essentially was the sort of traditional marketing model. What we believe now is that there is this intermediate step called the zero moment of truth. And this is essentially when people see the advertising, but they don't just then go ahead and go to the store and make a purchase. They will then go online and do all their research. And they will look at corporate websites, they will look at blogs, they will look at forums, they will look at review sites, they will look at comparison sites, and they'll go onto their social networking sites to try and understand what their family, what their friends, what their trusted acquaintances say about that brand and about that product. And it's during that whole process that they will make an informed decision as to what brand and what product to go ahead on. So it's quite a key part of this purchasing process, if you like. And just to reiterate what a number of speakers have said earlier, is that it's vitally important for organizations to engage in that conversation at that zero moment of truth if you're going to positively influence the consumer about your brand and about your product and service. You can see from this slide, again, this is across all categories, but it does include financial services as well, in terms of what impact each of these stages had on the purchasing cycle. As you can see, 84%, so that's greater than the stimulus, i.e. the advertising. It's greater than the first moment of truth. 84% of people say that they are influenced in their buying decision by that zero moment of truth. That is why it's so important that organizations have to engage in that conversation. Now, I'm going to go back a slide, if I may. And the reason for that, quite simply, is that, once the second moment of truth, once somebody has bought a product and they've experienced it, then they're going to share that experience again back to their friends and their social networking. So that becomes the next person's zero moment of truth. And that pretty much is the viral impact of social media. Now, if you bear in mind, it isn't a case, I think, again, as John probably said earlier, it's not a case of social media, you just whack up a Facebook page or you do Twitter and then you rub your hands and think, right, that's social media cracked. That's not the case at all. It's how it all joins together. And if you bear in mind that, I'm going to have to look at these stats, on Facebook, there are 150 years worth of YouTube links every day on Facebook, and 500 tweets per minute of every day have got a YouTube link as well. So that just shows that all of these different social networks are very much joined together, and it shows the viral nature of this as well. So if you cock up on service, word of mouth has always been the most powerful form of marketing. If you cock up, then typically, I think traditionally you would say, a person on average will go and tell 7 other people that they've had a bad experience with that brand. That person will then go on and tell another 7 or whatever. Social media is word of mouth on steroids with these kind of statistics, because if you screw up, then it's going to be mass scale. That's the downside. But by the same token, if somebody has a really good experience of your brand or your product, then it can work very much in your favor. And I would absolutely sanction what other speakers have said, is that you have to engage in this conversation. Whether you like it or not, your brand, your products are being talked about in social media. And you've got the choice of either burying your head in the sand or getting involved in that conversation and trying to positively influence what people are saying about your brand and your service. So zero moment of truth is where it's at, basically. So I guess if you combine these 3 trends, of mobile, local, and social and personal, essentially what this is doing is blurring the distinction between the offline world and the online world. So, for Google, you kind of expect me to say, oh, it's all about digital. Ditch everything else, it's all about digital. That's not the case at all. Digital is important. What's even more important is how you understand how the offline and the online world comes together. And you have to think of that in the perspective of your customers as well. So there's often talk about channels. Should we deal through the branches in the instance of banks? Should we deal through IFA? Should we deal through contact centers, online, so on and so forth? Customers don't give a hoot about channels. Customers give a hoot about the service, the sales and service that they're getting from their financial services provider. So it is very much a case of putting the customer at the heart of that model and saying that if your consumer only wants to deal with their financial services provider through the mobile channel, then let them do that. Build the capability for them to be able to do that seamlessly. If that customer wants to deal with a financial services provider through a range of different channels, then absolutely, again, you have to provide that service and to do it in an integrated and a seamless way where that whole customer journey is smooth and uninterrupted. And what I mean by that, I'm going to have to use a retail banking example for this, unfortunately. But if I'm on the train commuting into London, I need to remortgage, I'm on my tablet device on my smartphone, I'm reading up on the brochure about what mortgages are available. You know, I might be on my tablet getting a quote, filling in a few more details, getting an indicative quote as to what my mortgage is going to cost me. I'll then go onto Maps, find out where the nearest branch is so I can book an appointment online. And then when I go into that branch, I don't expect to be treated as a stranger where I have to start from scratch with the whole process. I expect that mortgage advisor in the branch to already know what I've filled in online, so I'm starting from the point that I left off. That is seamless service. That is integration across channels. And that, I think, is a source of competitive advantage for organisations moving forward. And if you want to look to other organisations outside of financial services, look at the retailers. Look at John Lewis, for example. You know, their strapline now on TV is store, online, mobile. And the way in which they integrate that in terms of their customer proposition, I think, is exceptional. So, assuming the technology works now, I'm just going to show two short videos which I think to a certain degree help to try and bring this, this point about offline and online worlds together. So cross your fingers for me here.
Want to call the agent?
Check this out. I downloaded it yesterday. It's around $7.50. I think we can manage it.
What would the repayments be?
Well, we'd have to make a few cutbacks.
What about something we could do up ourselves? How much do you think that one's worth?
It recently sold for $5.50. Renovating could be fun. It's a great area.
Yeah, I really like it too. And we do need to think about the future, the resale value.
Seems to tick all the right boxes.
Okay, why don't we check out some other properties in the area and get the bank to call us later so we can organise pre-approval.
Hi, how are you going today?
Yeah, well, thank you.
Would you like to take a look?
We'd love to.
Okay, so how cool is that? Okay, I mean, this is what Commonwealth Bank are doing in Australia at the moment. So this is pulling together a lot of things that I've already talked about. It's talking about cloud computing, talking about mobile, you know, the locality as well. People finding out using virtual reality to a certain degree about, you know, certain properties that they're interested in buying, how much they cost, what they would be able to borrow from the bank, and so on and so forth. So use your imagination in terms of taking that further to say, well, right, you know, that bank is going to be able to lend me the money that I want for my dream house, so I'm going to make an appointment online with my mobile phone at my nearest branch, and then when they do go into that branch, that mortgage advisor has got access to all of that information that's already been put in. So this is becoming a reality already. This next one, apologies, it's not meant to be a sort of pitch for Google product, but again, it's sort of talking about how to bring things together. Now, this didn't work when I rehearsed earlier, so it might not work now, but what I do know is that the sound's a bit dodgy on this, so if it does work, apologies for the sound. Okay, so apologies to the Americans amongst you, but that was obviously in America, it's a bit cheesy, but I think you get the you get the flavour of it. So again, you know, what Google Wallet is designed to do, I mean, this is not, by the way, you know, us trying to take over the payments world at all. But again, this is our recognition of the fact that the online and the offline worlds are blurring, and us trying to offer a proposition to consumers that brings the two together in such a way that it adds, you know, distinct added value to the consumer. The last thing that I want to talk about is that, I guess, coming back to the point that I was making earlier, that you know, the internet is integral to the purchase cycle, and that typically, because of this zero moment of truth, when people embark upon that purchase cycle, they're on a quest for information, and they will use the internet, and typically they will come to your website as a way of trying to find out about information. And that often might be the first experience that they actually have of your brand or your product. So it's absolutely key that you get that experience right. So again, another short video. Make no apologies for this, because trust me, it's more interesting watching this than it is hearing me bang on all the time. Here you go.
Hey, just like thanks.
You sure?
Yeah.
Username?
Nick Ann?
No.
And 1983?
No.
Zambi Pops.
Sorry.
Zambi Pops?
Okay, don't worry, I'll help. What's your postal code?
Oh, it's GU749ZT.
Welcome back, Nick Forever. Please listen carefully to the spread license agreement before continuing with your purchase of a loaf of bread. If you do not, blah, blah, blah. You also agree not to use any bread-based product for any purposes prohibited by United Kingdom law, including without limitation design, development, and manufacture of missiles, chemical, nuclear, or biological weapons.
Tick.
I'm afraid you've timed out.
What? Sorry. Hello? Excuse me. Oh, yeah, hey.
Just what, though, sir?
Yeah, we just...
What's your username?
It's Nick Forever, but number 4, not the...
Gotcha.
Yeah.
Okay, I'm just going to check that you're a real person. Could you say that for me? Okay, how about this one?
You know what, forget it.
This one?
Hippo Potter Nice.
You're in.
Great, I'm in.
£8.85.
It's supposed to be 98 pence.
Plus express delivery.
What's that?
Oh, well, it's express delivery. It's fast. But there's standard.
Standard.
Standard delivery. That's £4.99.
Why?
Bread insurance. You didn't untick the don't decline bread insurance option.
You know what, I think I'll risk it.
It is quite close to the sell-by date.
Don't care.
98 pence it is. If you want to pop back in 5 business days, it'll be ready for your collection.
Well, I need it now, obviously.
Oh, okay. You want the take-home today price? Well, that's £3.27.
You know what, I'm going to go.
Come back soon.
I will.
Okay, that's quite humorous, but does it strike a chord at all? Now, you know, often, as I said, you know, the first exposure that a consumer gets to your brand is via the website. And, you know, there are numerous examples where website developers make it bloody hard for people to actually find out more information, to make an informed decision, and to go ahead and buy. Now, I know it's unlikely that, you know, certainly in your sector, that people would actually execute pensions and investments online necessarily, whereas this is talking about purchase. But nevertheless, there's some good lessons in there. And you know, typically what Google does with our advertisers when we talk to them about how they structure their web properties is to implore them to think like a retailer. Now, if you bear in mind, if you're a Marks and Spencer's or John Lewis again, if you go into one of their stores, they invest significant amount of time in merchandising the products that they have in that store. So they're constantly changing the shop window to keep it relevant, salient, seasonal, whatever it might be. They are constantly moving things around within the store, all designed to try and keep it fresh, keep the customer engaged, and to increase the yield per square meter within that store. It's constantly going on. Now, if you apply that to the digital world, of course, you know, typically the website is your biggest store, your biggest branch. It's probably doing more business than a great many of your stores. But what we see time and time again is that people will build a website and then leave it alone. You know, they might revisit it in 2 or 3 months' time thinking, well, let's change a few colours around. That is absolutely not the thing to do. We heard earlier about big data and, you know, how, you know, using data is going to be a source of competitive advantage. That absolutely applies in this context as well. It's important to make sure that you've got the tools in place on your website so you constantly know what your customers are doing on your website every minute of every day, and you're reacting accordingly to that. Working on the basis of what your customers are actually doing online so that you're improving that customer experience, you're making it easier for them to make informed decisions, and you're making it easier for them to buy, whether it's online or indeed whether it's, you know, seamless interface with an offline channel as well. And if you think of Amazon, you know, Amazon do this really well. At any stage, whenever you go onto their website, they are doing about 200 concurrent tests using multivariate testing to try and understand what is the best combination of tests that are going to reap the highest yield per square inch, if you like, of their web real estate. It is very, very important indeed. So that's it from me. I guess in summary what I'm saying is that, you know, the internet is integral to the purchase cycle of financial services. You know, our view is that RDR is likely to increase that from a pensions and investments perspective, purely and simply because people will become more self-directed. They will want to do at least some of their own research in the first instance, even if ultimately they do end up seeking professional advice. But it's all around how do you blend the offline world and the online world together so that digital becomes an integral part of your marketing and your distribution strategy. Hopefully that's been useful, and thanks for your time.